Hi everybody, welcome to the Baguette Investor Channel for a new weekly review. I'm back home, so I have my good microphone. You can see my trading account on the left. You can see my trading account everywhere, but on the left you have my total profits in nominal, and on the bottom you have my total profits in percentage. You can see I'm currently good in profits since the start of the year, which is what you want to be. I'm still way below inflation. We're going to talk about that. My goal is mainly to beat inflation this year. I hope I will be able to get more than 5%. So there you go. This is to build transparency as every time. My valuation accounts are right there. I have my cryptocurrency, my French stocks, and my world stocks. So you can see pretty good thing going on. Let's get to the technical analysis. I have a lot of things to say because there is a lot of things happening. There are a lot of things happening in the markets. English is hard. You can see the first thing we're going to talk about is the inflation numbers. You can see inflation in 3 economic zones. First, green line is, as you can see here, the green is US inflation rate. The orange is European Union Eurozone inflation rate, and the blue one is China inflation rate. You can see in Europe and in America, rates of inflation are going absolutely crazy. So people are starting to freak out a little bit about inflation. I'm sure 95% that at the end of 2022 there is going to be 10% inflation year over year in the US. That's very highly probable. Inflation is going absolutely crazy, and it will add up because some more inflation is coming because of what is happening in the markets. So yeah, the theme we are right now, we are no longer in the deflation theme just like we were back in 2015. We are really into the hyperinflation, because 10% soon will be double digits inflation. You could say that it's hyperinflation. What's very interesting is that you can see that in China, there is no inflation. They are on the edge of deflation. They're at 0.9% year over year, which is very interesting. Inflation is in Europe and US. Very interesting. So inflation is mostly coming from commodities. So we are going to look at commodities and see where we are in the cycle of the commodity bull market. This is a typical bull market where you have a bullish trend and you have higher lows. You can see higher lows, and we're probably going to make a low here. But there are cycles in bull markets where when the price becomes what we call overextended, when the price makes an exponential, usually when we reach the exponential, it's the time where the trend stops. Prices don't go in exponential way all the way. They need to correct, and maybe after that they make a new start. But what we're seeing right now is exactly that. You can see that we were overextended. This period went absolutely crazy during the war. Well, we're still in the war, but people really freaked out when the war started and started to go crazy on commodities. And you had a massive run-up. So what is interesting to see is that we are starting to see some bearish momentum on commodities. We are still, the overlying trend is very, very, very bullish, but you can see that if this one is in Europe and the market is open in Europe, you can see that we are starting to make new lows on the daily, which is a great sign for commodities, maybe start to breathe a little bit and to stop the craziness. But if you look overall, since the COVID low, we are up 141% on the Invesco commodity index. So yeah, commodity bull market is very, very real. And what we are going to see right now, I think what's the highly probable is that either the commodity bubble is going to burst and maybe inflation is we're going to deflate all the bubble we had, or worse, we are going to make a bottom pattern. So we're going to consolidate and we will start for another run for commodities. That's what I fear. So be very cautious about what's happening to commodities. This is where you need to look at for inflation. Inflation is very, very, very linked to commodities. Inflation is very linked to energy prices, to metal prices, to supply chain disruptions. And these indexes tell you how commodity prices are being affected. Of course, it's very overweight in energy. So if you want to look at more specific sectors, you can check the other Invesco indexes. You have an Invesco Agriculture, you have an Invesco Base Metals, and you have an Invesco Energy, and of course an Invesco Precious Metals, but that is not what we're looking at right now. So yeah, pay really attention to this. It's very interesting to look at different kind of commodity asset classes and see which one are going up, which one are going down, what's happening. Right now, after being way overextended, we are obviously due for maybe a week or two of pause, and after that we'll see what's going to happen. But you can see that this leg of commodity run-up was absolutely crazy. I made some money on some commodities, on corn and soy, which are mainly agricultural commodities. I did not make any money on base metals. The only base metal and the only metal I own is gold. I own it since the breakout of this pattern right there, that I like. There was some kind of consolidation, like this, and I bought 2 times. I bought 1 time here and a second time around there, I believe, which is I'm accumulating gold for obvious reasons, that when people start to freak out, they hedge with gold, and we're seeing gold go up more and more. So I'm just buying gold as the signal come. You can see that for gold, it's just very obvious technical analysis. For some reason, it worked perfectly. We stopped at the previous all-time high, so I believe we need to wait for the previous all-time high, and if the price holds above this level, I am staying in gold, and if the price breaks above here, I am buying more gold, and as long as we are here, I don't do anything. I tell you what I do. I always showed on Twitter that I own gold. Yeah, pretty interesting thing going on gold. I've been speaking about it for quite some time. Something else we need to talk about are bonds. Bonds are crashing hard. If you don't know about bonds, very simple. The interest rates represent the opposite of the price. If the interest rates go up on the bonds, it means the risk of the underlying bond goes up, so the bond value goes down. If you want to sell your bond, you will sell it at a lower price. You can see just exactly that. On your left, you have the BND ETF, which is Vanguard Total Bond Market, which is an ETF that represents the bond market. And on the right, you have the government bonds. The green is the 10-year, the orange is the 5-year, and the blue is the 1-year. And you can see that they are all skyrocketing. The 1-year is the most crazy because how fast it went up. And the most interesting is the 10-year breaking down from the consolidation since March 22 and is at the moment making a new all-time high. So I don't own any bonds at the moment because I don't have a long-term portfolio. And if I were to trade bonds, they were bullish. Usually bonds are bullish when nothing else is bullish. But at the moment, we are seeing stocks and bonds go down at the same rate. But yeah, it's very interesting to see what is going on in interest rates. Look at these interest rates, how they're acting. They are acting just like normal prices because an interest rate is a price. It's a price for risk. And you can see they are all making all-time highs. The 1-year is making local all-time high, you would say. They are not making all-time highs over 2020, 2017, but they are making a new 52 weeks high. That's what I'm saying. You can see the 5-year, the 10-year, and the 1-year. So that means investors are anticipating a lot of risk, and you can see that the value of bonds has decreased significantly. I'm going to show you how much. Yeah, bonds have gone down almost 10% since their high, which is important. And by that, I'm seeing also the currencies moving. I am really paying attention to the euro-dollar exchange rate because I live in the eurozone, but I own a lot of dollars. So I don't want my dollars or my euros to be worthless. So I try to own the right currency. What do I mean by owning the right currency? Owning the right currency means owning a currency that will appreciate relative to the other. If I see the dollar appreciating against the euro, I will be more likely to hold more euros. Of course, I will still hold a little euros because I live in eurozone. I need euros on the day-to-day basis. But what I'm saying is that if my big account, the accounts I have in my trading accounts, what is the currency I'm going to hold? I'm going to hold dollars for the moment because you can see that these are the Forex markets indexes. So each of these numbers are the performance of the currency. So if you see the only currency that has a positive return, the only currency index is the dollar, which means all the other currencies are going down, and the only currency that is appreciating its value relative to the other are the US dollar. The dollar index is mainly overweight in euro to dollar, but also there's a bit of euro of Japanese yen to dollar. But what that tells us is that investors are fleeing to the dollar. Investors are going to get dollars and don't want any of the other currencies. The why, I don't know. The issue with technical analysis is that you never know the why. But I know that investors are doing exactly this. They are fleeing to the dollar. So I am planning on owning assets in dollars or owning my currencies in dollars, because that's the currency that's going up in value. And if you own euros, when since the start of the year, your currency is down 8%, which is if you own like 100,000 euros, it represents a lot of purchasing power loss. If you add to that inflation, you add 5% of that, that makes you lose a lot of purchasing power. So at the moment, the goal is really to fight loss in purchasing power, and owning the right currency will help you that. So be really cautious about what your currency is doing. We have seen that with the Turkish lira, with the Russian ruble. Owning bad currencies is never good for storing your wealth. Last thing before we talk about my trades, the stocks are telling bearish signals. This is sad, I know, but you have to be you have to look at the reality how it is, and the reality is not looking good. S&P 500 is breaking down. I've been watching this support right there, and S&P 500 is breaking down this support. You can see on the weekly we're closing right now, and if we look at the futures, we can take a look at the futures very quickly. We need to reclaim this, and if we start to make new weeks and go down and down and down, this is going to be the start of a new bear market. But I don't decide, I just see what the price do, and I react according to it. The Nasdaq is also under heavy pressure. We are entering in a bear market. If you look at the moving average, oops, not right there. It's here. I'm stupid. Do I have my moving averages? No, I don't have. Oh, dang it. I will look at Ichimoku. Oh, never mind. I don't have my moving averages here. What you see is that there's the start of a bear market, and Dow Jones Industrial Average is the same thing. We are breaking down the support right there, and if we don't reclaim the support, which is very highly probable, this is going to be a bear market, and people will act surprised like they don't know what's happening. But we have seen the signs of weakness piling up day after day, week after week. And if you go back to this video, I don't know when you're watching this, maybe you're watching this an hour later. Right now, we are having cautious signals to be cautious about stocks, and especially growth stocks, because you can see the Nasdaq went down more than the Dow Jones, and the Dow Jones being overweight in value stocks. That's it for stocks. Pretty much all over the world, stocks are looking very bad. I can just give you a very rapid look at the European stocks, which are looking exactly the same. Very bad. You can see that European stocks are still in a bear market right now. If they don't reclaim like the levels over here, we are clearly in a massive bear market. So yeah, it's very hard to make money in stocks at the moment. What I'm doing? I'm holding a few stocks and a few things. It's all red right now, but my positions are highly in the green. I'm holding this stock still. I'm showing it every single week, but it's one of my best performing stock. My average price is here, but I should set it back to here because I canceled my add to. There you go. I bought it here, and I tried to add more to here, but the price did not take off, so I sold the position I had doubled, and I'm waiting again for a new breakout. If the price breaks above, I'm adding more to my position, and if the price doesn't do what I want to do, I sell the position. I take the fees as a loss, but it's better to have like $4 of fees as a loss than losing $50 or $100. I'm still holding corn. Corn, I took profits last week. I entered 2 times on corn, one time here and one time here, and sold around there because the price was very overextended. Fortunately, I sold the local top, but yeah, if the price starts to break to new lows, I will get out of the trade, and if the price goes back to new highs, I will add more to my trade. Grin is a shipping stock, looking good. NVA is a very bad trade I made. I don't know why I entered here. I have no idea what I did. I could say it's a mistake. Fortunately, my trade is in profits, and I have my stop loss at neutral price. But yeah, it's not really a trade that I should have made. I should have entered here. It's a bad pick. I really stock picked bad this stock. I'm not proud of myself on this one. IGA is a agricultural commodity ETF that is tradable in Europe. So with this ETF, I hold agricultural commodities. TGA is a oil producer that is not moving very strongly, and with the price of oil decreasing, I think I'm going to get out of this. FCX, Freeport-McMoRan, is the greatest copper miner in the world that is retesting the breakouts. As long as we hold this support level, I'm in. If we break down and cancel the breakout, I'm out. And you can see that it's happened exactly this on copper. We had a fake breakout. Oh, no, I don't want to do this. We had a fake breakout, so I'm thinking about getting out of copper. But for now, my stop loss is here, so I'm waiting for my stop loss to be hit. If it's not hit, I'm staying in the trade. We'll see how the trade plays out, but for now, I'm slightly considering this as a loss. And when the trade doesn't start and it cancels really fast like that, it means that the market doesn't want you to be right, and there's no need to force it. NMM Navios Maritime Partners is a shipping company. It's also looking very good. There's nothing to say except that there is a beautiful configuration. The sector is bullish. There is a nice breakout. So yeah, I like it. I have a few stocks on investment. Where are my other? Oh, my orders. There you go. Core Lithium, still a good looking stock. Gold, my gold ETF, which is correcting, but we saw that last time. HME, which is an oil stock that is performing really well. If you look at it on the daily, you can see that it's performing really well. And I bought uranium stocks last week. I bought uranium stocks. Elevate Uranium and Alligator Energy. There you go. I will add more if we break out. And as long as we stay like that, I have very small positions. My positions I wired to make me lose $200 to $300 if we fail to break out. I don't use any stop loss on those because the volatility is way too high, and I don't see myself using a stop loss. Like, for example, setting a stop loss right there. This would be... I could do that, but I don't know. I prefer just not using any stop loss and investing only the right amount I'm ready to lose. Tell me what you think about it. That's it. I think I covered everything I wanted to say. There was a lot to say about the markets, but a lot of things are changing right now. There's a lot of things happening. It's very interesting to see what's going on in the markets. We are really at the shift in the time of the markets. We are maybe getting out of a decade period. So yeah, very interesting to share this with you, and I hope you are finding value into me sharing what I do. Thank you for watching. See you in the next video. Goodbye.